What is the current state of the market? It's a question that's been on everyone's mind lately. We're in the midst of a market that's as dynamic as it is unpredictable. The recent performance of the Dow Jones, Nasdaq, and S&P 500 paints a vivid picture of this landscape. Despite the day's hesitant trading, the Dow Jones managed to dance around the uncertainty, climbing a modest 0.35% to reach a record high of 38,467.31. The Nasdaq, on the other hand, took a stumble, shedding 0.76% of its value to end the day at 15,509.90. The S&P 500 too faced a slight hiccup, retracing a mere 0.06% to close at 4,924.97. Yet despite these fluctuations, the tail end of January foreshadows a promising commencement to 2024 for the major stock indices. Now, let's turn our attention to the tech giants, Microsoft, Alphabet, and Advanced Micro Devices. Recently, the financial world held its breath as Microsoft and Alphabet, two of the tech industry's behemoths, revealed their latest earnings. Despite surpassing expectations with robust financials, both companies faced a lukewarm response in after-hours trading. Microsoft's shares dipped around 1.5%, while Alphabet experienced a sharper decline exceeding 5%. This reaction was mostly fueled by Alphabet's less than impressive advertising revenue figures. Simultaneously, Advanced Micro Devices, another tech heavyweight, disclosed its financial health. While it aligned with earnings projections and even surpassed revenue estimates, a cautious revenue forecast for the upcoming quarter triggered a slide of over 6% in AMD's stock post-market. Equity strategist Brian Hayes summed up the situation aptly when he remarked, "The market appears to have preemptively priced in positive quarterly outcomes, as mirrored in the recent impressive stock rally. Save for a select few, drastic post-earnings swings to the upside seem improbable." Federal decisions are another significant variable over the stock market. As we find ourselves in the aftermath of the Federal Reserve's meeting, the anticipation of unchanged interest rates has been a prevalent sentiment. With the world's economies delicately intertwined, even the slightest shift in monetary policy can send ripples through the global financial ecosystem. Our eyes now turn to Fed Chair Jerome Powell. His words, often parsed for hints of future policy adjustments, carry immense weight. A mere suggestion of a change in the interest rate landscape can stir the markets, making investors recalibrate their strategies. In the current climate, many expect rates to hold steady. Yet it's the subtle hints, the nuanced phrases that market watchers are keenly tuned into. These could indicate a potential shift on the horizon, a pivot in the monetary policy that could have far-reaching implications for investors and the broader economy alike. Investors are eager for signals from Fed Chair Jerome Powell that might hint at rate adjustments on the horizon. So, what do these trends and decisions imply for investors? As we teeter on the precipice of an unfolding financial narrative, investors are in the throes of a suspenseful drama. With earnings releases from tech giants and federal decisions, the potential implications for investors are rich with complexity. The market is a chessboard, and every move by these giants and government bodies reverberates across the financial landscape. The upcoming earnings roster is a veritable who's who of industry powerhouses. MasterCard, Qualcomm, Boeing, and Automatic Data Processing are all set to reveal their financials. These disclosures could induce volatility in their respective stocks and potentially ripple through related sectors. Investors would do well to keep a keen eye on these releases. But it's not just about the numbers, it's about the narrative they weave. The intertwining performance reports and monetary directives are shaping a tale of a promising year for stocks. Investors tracking stocks find themselves vested in a narrative of interlacing performance reports and monetary directives. Amidst these forces, the promise of a bullish year for stocks holds firm, underscored by the poignant outcomes witnessed in the month's closing chapter. Moving forward in this chess game of financial markets, how does one navigate the drama? The first step for investors is to stay informed. With the rise of the tech giants and the role of federal decisions, the market landscape is evolving rapidly. It's not just about being reactive to the changes, but also about being proactive, predicting potential moves and positioning oneself accordingly. The analysis of earnings releases and understanding the implications of government decisions can provide a strategic advantage. Investors should also diversify their portfolios, not just across sectors but also geographically. This could help cushion the blow from any sector-specific or region-specific downturns. Risk management is another crucial aspect. It's essential to assess the risk-reward ratio of each investment and balance the portfolio accordingly. Lastly, investors should be patient. The market is a drama that unfolds over time. It's not about making quick profits, but about long-term wealth creation. The savvy investor weaves their own narrative within the larger market drama, balancing risk and reward, diversifying their portfolio, and patiently awaiting the unfolding of the market's next act. The chessboard is set, the pieces are moving, and the game is on. Thank you for watching. Don't forget to subscribe to our YouTube channel for more insights on market trends and investment strategies. Your move, investors.